Today we welcome Brian Trowbridge, VP of Sales at FireHydrant.
When you go to a startup, what I'll just say is manage chaos. I can't say it any better than that.
In this episode, we talk about how Brian, who was very much part of the tribe at Click, App Dynamics, Data Robot, was able to transition into the world of startup.
No matter what, I don't care if you're going from an AE perspective, a sales leader perspective, just know that no matter what, you're going to be rolling up your sleeves, you're going to be taking it day to day, but things change quickly.
If you're thinking about going into startup, this episode is a must watch because we delve into the challenges, the reality.
If you have a mediocre RD, avoid it. I would even avoid a good company if I didn't have a good RD. So I think leadership is key.
We talk about how to assess a startup.
If you have a cash-strapped company with a year of runway and they're asking you to come in and grow a team, but every hire, every investment you make increases that burn, shortens that runway, you're almost signing up for a job that's impossible.
We also talk about the things that are unexpected or where to look that perhaps you wouldn't know. This is his playbook. This episode is sponsored by PGAI and Seller. Go and discover how these solutions can help amplify your sales execution. Check out the descriptions below. Welcome to Hunters and Unicorns. I'm Simon Kutis and I'm joined by my co-host Ollie Kune.
Welcome back to the show, everyone.
And it's with great pleasure that we introduce Brian Trowbridge. Brian, welcome to the show.
Well, thanks for having me, guys. It's a great pleasure to be on.
It's a real pleasure, Brian. I'm really looking forward to this session, mate.
No, same here.
By way of an introduction, you are the VP of Sales over at FireHydrant. And it's a really interesting journey because you've been part of the tribe, you know, your early career, Brian McCarthy over at Click and App Dynamics, Data Robot. And then you took that leap of faith to go into startup world, right? Mm. And today's session, we want to spend a bit of time really going and understanding the reality of what startup life is, as you know, for your first time as a head of sales within that environment. Help us understand, you know, what are some of the early learnings, some of the early experiences in that environment?
Well, I'd start off, well, you get the ups and downs of regular software sales, but when you go to a software startup, what I'll just say is manage chaos. I can't say it any better than that. It's you're trying to sell the ship, build the ship, finding the holes, the leaks, and trying to figure out what you can hang from the sales to get you sailing faster on this side. But it's no matter what. I don't care if you're going in from an AE perspective, a sales leader perspective. Just know that you're not going to have some of the resources like a Tom Levy or JP Bolin standing behind you, have built all this terrific content, speeding up reps. You're going to be wearing multiple hats, digging in the data. Hopefully you're bringing on great people like head of RevOps, but just realize that no matter what, you're going to be rolling up your sleeves. You're going to be taking it day to day. You're going to have your North Star, of course, but things change quickly. You're going to find holes that you didn't think were even there that you got to fill in quickly or jump around. But it's also, too, a level of excitement that you just get. Like sometimes you get into these machines, these larger companies that you're part of just a cog that's just running. Like App Dynamics just was greased, and while like it's still hard, like you're part of a machine. This one is like, wow, okay, we have to start from scratch in some areas, double down on what's working in others, and then just really always take a look to reflect and be like, are we on the right path? And the nice thing is you are nimble enough to make some adjustments quickly, but at the same time too, you're making decisions at a company level, banking on the company itself where 12 months, 24 months down the line, you know, like, did you make the right play or did you sink the company at that point?
That's the stakes that we're talking. You're not talking about, did I make my number? You're talking about, this company doesn't exist.
Yeah. No, and that's the thing. Like, did I just hold up my bargain to the investors of the company, as well as I'm recruiting great talent over, either people first job in their career or somebody that's got a family to support. I'm always thinking about them as you got to make the right decisions. We got to grind through some things because I know at the end of the day, from an investor's perspective, you're got to be smart about the decisions you make, but you're changing and altering people's lives. You're hoping to do it for the best, but at the same time too, it's a risk-reward situation. Like you take someone into a Series A, Series B, you don't get things right, all of a sudden is that a blemish on their career, their reputation, or did they have the W-2 that they needed to do to support their family or support their why or their goals?
Yeah. You talk about it very much, did I do right by them, but also did they set the right expectations? And again, you've had some phenomenal, mentors and people to be able to support you, but help us understand a little bit around the decision process and making sure that you're de-risking it as much as you can and how you evaluate these opportunities that it's the right one.
Yeah, and I think we were talking a little bit of it's difference between a C and a D company that's established and their role, and at that time it's like, I want to be a part of this organization. I know there's not a 100% guarantee or a sure bet. I mean, Wiz was probably not a bad one, but at the same time too, like it's some that you evaluate in any company, like what's the TAM, what's the tech, what's the talent there, first-time founder, multiple outs on that side. But when I was going through the due diligence of FireHydrant, there were some things that I had comfort on. Tremendous board, Matt Murphy at Menlo, who was a big investor in AppDynamics and also has had some great outs in the software community. So I knew Menlo backing. I also knew Workbench, which is more a seed investor here in New York City through a prior acquisition of DataRobot, knew them. So 2 of the main 4 board members I'd known they're very successful. And it was really at that point, especially if you're a head of sales, really getting used to and comfortable with the founder. Like I would say to an AE, that AE-RD relationship is your most core regardless of the leadership. Like you have to have that relationship with the founder. It's a level of trust, and you're realizing too, from my perspective, they're putting their company, their life investment. Most of these founders are going in 10 plus years. A lot of times they're looking from seed to when they actually have an out or can call it success, but many are failing, is like, hey, I respect that level of risk. I respect the level of effort they put in. They have to have the same level of comfort with me where I'm coming in and yes, I'm going to follow like their North Star. But Robert, who's my co-founder, brought me in for level of experience with the Playbook, for lessons learned, that I bring him facts and data from what I'm seeing, and this is some of the investments I want to make and go to market. He's got to trust too that I'm making the right call for his company, but now our company.
Why are the board members so crucial in this type of environment?
Yeah, I think the biggest one is with a first-time founder, and it doesn't mean can't be great. And I really respect Robert for what he does and how he solved the problem he did, what FireHydrant is today. It's just a level of experience. And it's also too, like, how active is the board in it? There is board members that just will sit on the board, show up to meetings, say 1 or 2 things. Menlo and Workbench will make introductions. They will set you up with operators like Menlo, even though he was in my network. Like I had Scott Davis and like Parm and my not beck and call, but like as an advisor on the go-to-market as well as other ones, but just that like Workbench community. Amazing at getting New York, even financial services introductions, kind of showing just a benchmark too what other companies in the space are. Like I'll call up my CRO network to see what it is, but they can give me comparables in their portfolio, be supportive, like, hey, actually on this side, your growth rates compared to your burn are like top tier compared to our portfolio. So that level of support and active board members is something that was part of my due diligence, and I didn't realize how crucial that could be, especially with a first-time founder. And I mean, you got to look at your ELT, who else is like in the stack and what's their strengths and weaknesses. But without a founder that's done it multiple times, like a Joe T, like I look at the board as one of the key criteria of who I'm looking at for possible future opportunities. And I even think as much as I got that right, I almost underweighted that in my initial evaluation, but it's a key criteria moving forward. Post a great exit from FireHydrant and future considerations.
Yeah, it's a really, I think this is a really crucial point. I just want to double down in here just a little bit more. What could have happened had you not had that support from those advisors? What could potentially have gone wrong, or what does a good board bring in this scenario?
Well, I'll take. The first example was I was a month and 10 days in, because it was March 10th, and I realized it was my daughter's birthday. We were in the hospital, but March 10th of that year was Silicon Valley Bank.
wow.
yeah, of
Yeah,
course.
Yeah, so it's my VP of Finances, his second weekend, my third week, and I swear, I'm like, Crystal, I'm not doing work. There's just something big in the market. We got our money in Silicon Valley Bank, but the board stepped up and just like, hey, if you guys need to hit payroll as you work through these things, like you got it covered. And just even having that level of trust to be like, when our company could be, I mean, so many companies experience that, but it's a board that steps up and be like, we got you. Like they know we're a good part of the portfolio. We're going to back you up on that side. To like the last 2 years, if you haven't been in AI or Cursor or Wiz or something, like funding has not been the most easy thing to get. So at the end of the day, while we certainly have to do our jobs to show growth rates, efficiency rates, everything else, like it's truly a board to like back you with other investors. I mean, we can get into the history. Like we made an acquisition of one of our biggest competitors and that allowed us to do a raise in a very illiquid financial environment with the VC community, but they believed in us. They pushed for that. And that is something that gave us years of runway when a lot of other companies were shutting down doors or getting very low multiple M&As that wasn't working for the investors, but at least get something out of it. But that's truly a good value of what a tremendous board can do.
What about guardrails for the actual founder and the relationship between sales and the founders as well? I mean, has your founder always been a big advocate for sales, or has the board and yourself really had to kind of spend time to help him understand and embrace that? Because there's always, that's something that's a bit of a disconnect that we see many times with founder.
The good thing is, and that's a big part of my criteria, is while Robert was a first-time founder, he understood the power of the Playbook, what it could do for him and his company, especially with Matt Murphy and his background on the piece. So he's been a big supporter of the outbound sales motion, a big supporter of some of the things we bring to the table. Like I didn't have to sit there and explain to Robert like what MBMs or an executive buyer med pick. Like he was pretty good just from his piece. But if that wasn't the case, like there's been some companies where I was doing my due diligence and you hear nightmare stories about the founder and 3-4 VPs out the door like immediately. And I mean, we have to get it right and get it right fast. But like if I see those warning signs, like no, I got options in the market, and that's a key criteria that I think anyone in sales, regardless of position, should be looking at is what, I mean, there's so many sites out there, like read the reviews, talk to your community. And I knew some people at other companies that I held off of joining until I knew that there might be changes when a company got to a certain stage on, okay, now they're bringing in a CEO, the co-founder that was never sales friendly might be taking a step back. Okay, then you might consider them.
With regards to the organization and where it was when you joined, what was the revenue?
This was a earlier start for me. So we were right around 5 million of revenue. Right. We certainly have surpassed, gone into the tens plus of just with acquisition and organic growth. But 5 million was certainly one of these smallest startups that outside of maybe Optier that I've been a part of. But yeah, we started off at 5 million of ARR when I came in.
Right. And obviously your financial remuneration in choosing the right opportunity, yes, you're in there for the equity play, but also at the end of the day, you're there to earn money and ensure that, you know, what they set. How did you go about the process of evaluating what those expectations that they were looking for you to achieve were achievable?
Yeah, it's it took a look at a couple things. I mean, you see sometimes the growth rates that some people will put out, like we're going to go 300%. And there are some companies that's realistic, but there's a lot of companies where you're like, no, I don't care how many sellers you have of this. Like we may have product market fit, but the TAM's not there yet, or we might need to get to a multiple platform play to really get there. I'm just looking at retention rates, growth rates, and overall capacity. So I look at, there was a couple factors outside of just the growth rates. Like I've been part of organizations that raised a tremendous amount of money, but all of a sudden when things shifted in the market, like you're sitting there, I think zombie unicorns are there. So one of the biggest things that I learned too is like, I'm coming in at a certain level. I know this is going to be managed chaos, a grind. What was the valuation that the founder has raised? Have they gone big right out of the bat and growth expectations are going to be through the roof? And are those realistic expectations? The one thing, and I evaluated some other competitors, evaluated the space and some of the possibilities. Like When I started FireHydrant, we were pure play incident management, but we were a leader in the space, had more data than anyone, had great logos compared to a lot of the competitive space, but looked at with a secondary product, could we go after a TAM like PagerDuty and alerting, which I look as commoditized. So based on the valuation of the company, some things with executive level compensation negotiation that I thought, hey, this was a great risk reward scenario, aligned with a perfect board with a founder that I had a relationship with. And there were some other things that I did technical due diligence on. Looked at customers. I mean, some of the customers were FireHydrant customers I'd worked for in the past. So called up a few people. How are you using it? Do you like the tool, et cetera? As well as there's certain things like I knew I would change around the go-to-market team. So even in doing analysis, I'm like, could use some different rev ops, customer success, the right AE, and that's regardless of what organization you're coming in. Like, hey, we're outbound focused. We run a various play. Not everyone is fit to run that playbook. You try to develop them, but sometimes they don't. But one of my pieces was, who's my technical team, my SEs? Like, there's sometimes your gold. Like, you can bring your founder around for a lot of meetings, but do I have the strength in my pre and post sales organization? This team had been there, they're rock solid, all of them are still there. I'm like, I can go and make sales, but I need a good technical team to back me up. So that was another very key criteria when I was looking at companies of coming in. Do I got to restart that process, or is that stability and success that they've grown to 5 million on quickly there?
This episode is sponsored by Seller. Seller provides a white glove treatment to every complex deal with their bespoke system, whilst ensuring you get the most value from your CRM for everyday selling.
You said that you worked closely with Scott Davis and Palm Upal, who were helping you in your due diligence process. Were there any things that they helped you question that perhaps wasn't on your radar initially?
Yeah, I think the biggest thing is just the environment they were in, like really push on runway. Like, what's the level of investment? There's nothing like...
When you say runway, break that.
So how much, based on how much they've raised, how much cash in their bank have compared to the burn. And then any kind of growth rates that you're going. Like, if you have a cash-strapped company with a year of runway and they're asking you to come in and grow a team, but every hire, every investment you make increases that burn, shortens that runway. If you don't have more than a year, like, what's your capacity for success? Like, you're almost signing up for a job that's almost impossible. Like, they want to bring in a big name, but if you don't have runway to make changes, some time to, yes, evaluate what made the company successful, but how do you then go about whether that's going up market, changing markets, introducing a second product? There's just speed. Like, there's only so much you can do. So especially with the environment we were, that it wasn't free money like 2020, that was one that definitely, when I called like Scott, Parm, even Brian McCarthy and Dan Weinberg, was just a key criteria of that piece, because there needs to be some level of investment, or what can you really do? That was a learning, especially with this new environment. Like, I went through 2008, I sold in that environment. That's why we made some of the decisions on cost consolidation and tools that we did early that have really paid off for us. But knowing that the level of the VC community, what were they looking for, what were they tapping, that was one that guidance from experienced leaders that see this every day was so important to me.
How much did you look at the valuation and dilution and that aspect of the business relative to your criteria? How important was that, and what was it that you were assessing in that regard?
Oh yeah, it was a key one. There was actually a competitor that their valuation at a much smaller ARR that they raised kind of scared me a little bit, just because I'm like, the growth expectations of what you really could do, especially with lessons learned of some of these companies that raised huge, and you're like, all right, I have to get to $2-3 billion to have a legitimate out, when companies could suffer reputational damage or just lose that product market fit or that competitive edge in the market, or you'd be an AI company and then all of a sudden LLMs come up and the whole market has changed. Like, I think there's no better example of, I was looking at some BI companies and I'm like, if you don't have an AI story, I'm not going near you. I have the experience, but I'm like, no, that's going to change in a heartbeat. So the valuation was, I think FireHydrant, especially with the maturity of their board, had raised very smartly. They raised realistic valuations, especially at their ARR level they're at, where you're looking at multiples and what could be done, was done smartly. So it was one of those ones where like I may not have appreciated as much when I started it, but this was also too looking at multiple opportunities of advisement, and especially with mature CROs that have gone through this before, to be like, this is one of the ones you need to, because especially if your earnings potential is so tied in with the equity of the company itself, like dilution, can happen very quickly, especially when you need to raise, and maybe you're not in a position of strength in this market compared to if you're riding a great wave. Hey, then fantastic.
So are you saying that the more you raise actually can bring more danger? Because obviously a lot of people will look, this company's raised 100 million at Series A. I know that's probably, but actually what does that then mean in order to get for the likeliness of an exit event? Is that?
Yeah, no, and I think it's true. You got to balance it because the VC community is looking at bets. They're not throwing the money around like it was. I think there's a good indicator now that you're like, hey, you're behind the right company. But it does put a risk factor, especially when equity is such a large component of things can shift in the market so quickly. And there's some companies that I got founded where I'm like, I don't know the due diligence of that VC, why they're going all in there, because from what I'm hearing behind the scenes, everything else, I don't know if that's the right play. But again, it's like the stock market. If you could predict everything, you would be well off. But it's just that's an indicator. That's a scoring point for me when I look at it. It could be a great one, like, hey, this company's going through the roof. I mean, Wiz being a great example. Or it could be like in a certain space, free money went in, people are making bets, but I'm like, that to me, expectations, everything else from at least pattern recognition, what I've learned in my career, is something that I'd be cautious on.
What are some of the biggest learnings you've learned about yourself through this process and through this recent?
I always look at, I take huge pride in what I can build for my teams. And this level of company, I've been able to get so hands-on with people, like with deals, with structures, teaching them like deal negotiation. That's just experience. But also I always look at what can I learn in my career? Like I still want to get better each day. I force myself to even use some of the tools on your shirt to get better from an AI perspective and efficiency perspective. What else can I learn to be a better seller? But I think too, the amount of learnings just to get like, yes, I know CAC and magic number in this, but to really get into the details as you're making investments, especially putting together pitch decks for the VC community, considering if you should acquire a company and going through due diligence, both how do I change some legal structure of contracts, and of course you're getting advisement during the time, but how do we bring together two platforms? What do we keep? What do we go? We made certain decisions based off of advisement, what we thought would be best for our business, but that is a factor that even running the East at some of these companies never had hands-on experience. I'd get inputs, or like sometimes you get to shadow a board meeting, but to be in it at that level, going through how do we raise, if I make this investment, how does that affect my magic number? How are investors going to look at that? That's a whole new level of learning. But that was a big part of when I was considering this role. When I was talking to Brian and others, they're like, we can tell you got the itch. It would be great for your learning experience, especially as you look to grow your career over the next 10, 20 years. So it was one of those ones where, but it is managed chaos. Try to do all that while you're running deal structure, recruiting, getting sales enablement things together. You do wear a ton of hats at a startup.
Yeah.
Thanks to our sponsor, Pipeline Generation AI, the platform that researches your top accounts, creates insights and assets to help you engage more effectively. Elevate your conversations and transform your pipeline with Pipeline Generation AI today.
Obviously, you're at the mercy of your next raise, right? How much does that play on your mind, and how much is that a daily kind of, consideration?
Oh, it's constant. I mean, you realize, I think as an AE, you're just PGing. You're like, I got to be at my MBM count. I got to hit my number. Well, that's that. That is, and I think that's how you simplify it. It's like two things, PG and moving opportunities. Here, you're thinking, how does this affect the company? Like this deal, this whale of a deal could be a game changer. Hopefully you're not just depending on that to hit a quarter of this, but like, how do we get like, should I not make this investment compared, like, because this could help some monthly burn numbers that we're kind of showing investors or compared to the board, like those factors in and out. Like the good thing is just like as an AE or RD or a second line at the end of the week, I always block off time. I evaluate the numbers. I look through deals, structures, both for individual coaching opportunities, for patterns we're seeing in the business. But like then it's kind of looking back at the quarterly goals, the next raise, and be like, how is this factoring in? And I mean, you can look at a daily, weekly, monthly, quarterly, but you got to find little pivot points as you go through. But you realize at the end of the day, like there's an ultimate goal just beyond a W-2. It's like, how do I get this company to the next stage of a raise or optionality if you ever need it comparatively? So like, no, constant something in the back of my mind. I think sometimes I go to sleep and I think about it. Out the back of the...
Are there specific markers that kind of your North Star for eligibility to the next funding round? Is it ARR? Is it cost of sale? You know, are there very specific metrics that are kind of more prominent that you think, you know, these are the ones that we really need to make sure we're getting towards?
Yeah, and I think, I mean, overall growth percentage still is a big indicator.
Growth percentage,
yeah,
so year on year growth.
Yeah, I mean, I don't know if you look at, especially in this stage, like the triple, double, like it's, but like, are you capital efficient? Are you growing well enough with what you do compared to your burn? So that's where like I'll sit with both the board, but like my VP of finance and I, while finance sometimes was an enemy of mine in the past, like comp plans this, you're yelling at them. Like this is, no, it's a true partnership because it's like, hey, we can increase all this investment and get our growth rates up, but what is if I only come in at 80% capacity versus 120? What does that do to other factors like CAC or magic burn? Like that's some conversations we have on a weekly basis as we're kind of letting Robert deal with the company direction, the North Star. I mean, we have a consolidation play now. We're certainly building. We have all this data and we have some competitive advantage in the amount of data. So we're building our North Star as a company and a product. But how as go-to-market and how working with finance and my engineering team, how do we achieve those goals? So it's growth rate. We're looking at logo velocity. We're looking at NRR. And then there's more of the financial metrics. We're looking at our monthly burn rate, magic number, et cetera. But all those ones we keep a dashboard of. We look at it weekly, how we're trending when we're reforecasting. And if there's certain areas that we see a competitive advantage in or like we see a stream of market, example, a legacy alerting provider announced an end of life. It's a boon for us because it creates a why now for a technology decision with organizations. Okay, we've had strength there, but what do we do from a product investment, from a marketing, from an outbound investment to double down in that area, which is going to help our growth rates? I mean, logo velocity, all these things that we know the board and the investors are looking at for our next round of investment.
What are your margins of error and what are your tolerances? You know, is it are they big gaps or are they, big tolerances or are they really, really slight? You know,
I look at it as in certain areas there's a small margin. I mean, certain things like a hire. I always look at you bring a bad hire in. That's a big. I take that seriously. Like there's no bigger mistake you can do on wasting a year of time not getting the right talent there. So I still look at some of the fundamentals of Playbook, like recruit great talent on this. But when we're talking like I give my commit, which is always my floor, my best case. Like and my
you give your best case, sorry.
Yeah. Because that's the thing. I was on with my LT today and they're asking for, hey, what's your Q2 recommit? And for certain deals, enterprise, we're looking out a quarter. But I'm saying like, here's this. This is one I guarantee I'm going to bring into the business. You may fire me if I don't hit it, but I need to give you a baseline commitment so we can adjust any out quarter investment and everything else. But that best case can be like, hey, I can bring it here and this is what it does to the metrics and we scale back and look at everything and this is where we make some additional investment calls where maybe it makes sense to bring on some more engineering on this side or another AE and is it commercial versus enterprise? And yes, that increases the burn rate, but based on those margins there, we're like, no, this makes sense for the business, especially if we look 6 months to 12 months of what that can do from a capacity perspective, from a product or even competitive advantage perspective. Like some of the investments we're making in AI right now is just based off, and this is That's why I went to an AI company before. And like, we have so much data, but how are we taking advantage of it? Because we have strengths here on this side of the product. We are crushing the legacy alerting providers, which is great from a tool consolidation play. And we're going against that with CFOs and how they're looking at their business. So we're trying to take trends in the market to our advantage, but also too, like, how do we unlock some of these items where efficiencies both internally, but also efficiencies in our product using AI, make those decisions. But those are heavy capital investments that margin of error is low, but there are certain things where some marketing decisions or making this investment, and I mean, it could be tens of thousands of dollars. Like, that sounds like a lot, but in the grand scheme of things, that's not a huge one where if I get this wrong, my company's going under.
When you talk, you sound like you talk business language. You know, the last 20 minutes or so that we've been speaking today, you're talking the language of business. Mm-hmm. Is that something you always had, or is that something that you've really just honed in the last couple of years?
I mean, I certainly have increased my knowledge over the last 2.5 years, but I actually think this is a benefit of the playbook. Like, I'll go in and I know on every deal, yes, I'm a seller and I'm building 3 Ys, but like, especially in these enterprise deals, when you're getting a company to invest 10 to 20 million, you know, at the end of the day, they have a CFO that's looking at the investment, asking, what's the ROI versus the investment? Why can't we just do nothing? And you're preparing your champion in the same way to be like, you got to stand behind these metrics. This is how your CFO is going to look at this investment. Here's the risk you're going to do. So that consultative selling, the whole process of 3 Ys, MedPick, doing a BVA with a company, like, I've always had that as a lens of a buyer, and I matured that over. I wasn't doing that as much when I was a territory rep. It was more transactional. But when I got into enterprise and major accounts, like at Dynamics, some of the deals with the bank, and we had some great resources with us, like at a field CTO that was finance, and I learned so much from them as deals came about, and like we'd build huge business cases. So looking at that from selling to the buyer itself helped me prepare just for like how I'm handling that more internally, though I'm constantly learning. But I'd say the advantage of, especially when you're looking at the enterprise sellers, and you can't go into JP Morgan and Morgan Stanley with they're very experienced buyers. They look at everything in the market. Their procurement teams are tough, and they can smell out BS. Like, you got to harden that business case. And I look at it, this is the same way when I'm preparing a board deck or helping out my founder with a pitch deck, looking at that same lens of, yes, I'm in sales, but I've learned a lot of this through just getting maturity in my career around selling. And then it's also, too, where do I have gaps? Like, I'll have conversations with my VP of finance. I'll seek out others in this space. Like, when we launched a second product and we were looking at efficiencies, I'm like, I've done this as a seller. I haven't done this at a level of company. Like, how do you get pricing right, everything else? So it's reaching out to our ex-pricing lead at App Dynamics to get her take, talking to CROs. Like, that's where, and I think Joe T had mentioned that, like, when you don't have a gap, go talk to 10, 20 of the smartest people that you know do it and accelerate that learning curve quickly.
It's so interesting that you say that, because at the beginning we said you walked away from the tribe, but the reality is that tribe, actually you're still leaning on that tribe every single day as part of the role that you're doing.
Even through the assessment.
Whether it's through the assessment, but even, you know, day-to-day challenges, you're obviously still leveraging that network.
Yes.
I mean, what would it be like if you had none of that?
I don't know. I mean, I'd look at it as I don't take it for granted. And these are some learnings. Like, I remember, and I've seen people on their best days, and I've seen people had just gotten fired. I mean, VP of sales sometimes doesn't last that long. And one of the things that I've taken from previous advice is, like, your champions are an asset. You build that up. At this point in my career, like, my network is one of my most valuable assets to me, both internally, introductions. They also, and it's the whole credits and debits that you probably heard in the past. Like, I know I got to keep putting credits into the network. If I'm conscious of that, and this comes up on just relationships, your network becomes so valuable to you. Like, I don't think I would have been here at 2+ years now in this rapid of a startup and changing environment, and even the ability to fund and everything else, if I didn't have that network, that playbook, that foundation. Now, there's always things that you go and extend yourself. And again, like you said, business language, like, I probably wouldn't go to a first or second line leader in my network on that side, but there's some powerful CROs or other assets, finance people that I've learned through my career. Like, let me go build on them, and it makes you look smarter. But at the end of the day, you're just using their knowledge, their base, and then you're using your experience as well to try to make that as best decision you can for your team, your company.
When you look at your day-to-day activity in the business, what is the split from selling to board meetings to, all the different elements that you have to do in your job? What are those splits, and is there anything more are you surprised with things that are, taking more of your time than you expected when maybe thinking about what this opportunity might give?
Yeah, I think it changes throughout the quarter, and this is, I think, a big learning of putting in some good operational cadence and rigor. Like a lot of my quarterly planning, review at the end of the quarter, plan out for 2 quarters. You're preparing for your board deck and everything else. So that's heavier at the beginning of quarters and everything else, but it doesn't change the structure of PJ Mondays or Tuesdays, whatever day you want to pick, one-on-one cadences, the reflection at the end of the Friday where you're making those big tweaks to compare to your big looks. Yeah. And so every quarter we'll do an executive offsite. We look at all the financials before the board meeting. We're certainly going to get guidance after the board meeting and everything else, but we're sitting there and being like, what does the next 6 to 12 months of the company look like? I know probably, yes, you want your 3-year projections, but in the world of startup, you're probably looking a little bit less than compared to like Dahlia's, looking out 3 to 5 years. But it's also managed chaos. I'd like to say I hold to my schedule all the time, and I'm not going to laugh. Maybe from our HR team, I'd say 40 hours a week, but there's no way. There's just no way. So you try to do a family life balance. So I try to reserve my Sundays for the family, but there's Saturday mornings where I'm going through data and structure. But I also, too, I don't consider myself a good VP of sales if I'm not in it with the teams. I'm going on sales calls. I'm hearing that customer feedback. Like, I think the worst thing is you see some VP of sales that will live in Clary or spreadsheets and this, and how often they get in front of clients. Like, that's a big portion of that actually probably sometimes take precedence over a lot of things that I had holders on. Yeah. And I'm just knowing, like, after I put the kids to bed tonight, say goodnight to the wife, like I might be doing a little bit of analysis or building out that deck for that next thing. But you just kind of prioritize. But I always think of, and this was something I worked with Dan Weinberg when I took my first second line job, like, how do you all of a sudden scale from a first line when you're like really in the details to you're looking more at data? And it's something like we always talked about pattern recognition, but we always simple of going into the week is like, what's your big rocks versus your little rocks? Like, what's your 3, and you got to limit the amount because there's only so much you can do, but like you can't let those drop. And then the other things come up, and you always you do it in engineering, but you do it in sales. Like, what's the capacity for that 10 to 20% surprise each day? Like that I know I'm going to have to get on. I'm going to have to jump on that client call. You got to reserve some of it for that. But the one thing is, and this is development for a rep, everything else is like, yeah, you can be busy all the time, but is what you're doing actually impactful? And the amount of, and this I think even true in the startup, you have to be ruthlessly like protective of your time, your resources. But it's always kind of taking a reflection at the beginning of the day, at the end of the day, where am I at with my big rocks? What do I need to change over the next week? Or what might I need to spend that late night getting to because I was distracted or pulled into some pretty critical revenue? Because even though we've talked about more of the business terms, at the end of the day, like I got to sell and I got to have my team sell.
I want to take this opportunity to ask you all very kindly to go and hit the subscribe button. Whether you're on YouTube, iTunes, or Spotify, it will mean the world to us if you could hit that subscribe button.
So we've spoken a lot about kind of the leadership aspect, but obviously AEs entering startup. What are some of the things that they should be looking for? And also, how important is it to have the right leader if you're an AE going into a startup environment? Tell us a little bit about that.
Yeah, and this could be a little different from the founding AE with a founder compared to an AE with an RD. Just as I mentioned, that founder leader is such an important relationship. I don't care what stage. At the end of the day, if you're an AE, if you're RD, if he's great, go. You'll learn so much. If you have a mediocre RD, and there's plenty out there, and there's plenty out there with good resumes, like avoid it. I would even avoid a good company if I didn't have a good RD. So I think leadership is key. Like there's nothing I can't tie better to my career success, especially the early days at Optier and Click, if I wasn't tied to Brian McCarthy. Like I learned so much from him personally and professionally that I would say no matter what, whether it's the company, the space, I mean, you want to look at TAM, you want to look at all these due diligences, but you got to look for who you're going to be spending the day-to-day. Like some days in AE, I spent more time with my RD than I would with my wife at the end of the day. I mean, it is a serious relationship. I think we were talking about like one of my criteria on App Dynamics was I looked at Mike Ernest and I'm like, yeah, I can work for this guy. So that is one that I'd say you have to over-index in as you're an AE because you're not going to get especially in a startup, that leader is going to provide a lot of the onboarding, a lot of help in initial sales calls. That could be the founder himself, and that could be a great opportunity. But do they have the right skill sets? First-time founder, the technical founder, do they even know what some of these sales? So you might not get that fundamental sales development that you had. You might learn the market, the product, and it could be a great career opportunity for you. But this is one where I'd be like, hey, if you got a great sales leader, you respect them, you can learn a lot from them. That ability just to take a network or possibly future network opportunity or just expand your own career set. Sometimes I'd look at, especially early in your career, more important than just working for that right startup because maybe you hit the company right. But if you're not learning, growing, as I would say, earn, learn, and grow, like then you might have just wasted 2 years of your career. You might have had a good outcome, but how much success will you have at that next company that maybe have more resources, but are you truly a better player?
Yeah,
I think that's key.
because what we're saying here is obviously as an A, you've got a choice to go into the chaos of startup or go into an environment with maybe a more established operating with a much more resources. From a learnings perspective, obviously you are acquiring different skills, but what do you think is the opportunity for someone to maybe go in and work with someone like yourself where you still have the guardrails, you still get the coaching, but at the same time you're in that chaos?
No, I think that's why the leader is you can get some great hands-on environment and you can wear multiple hats. I look at an example. We just hired a BDR, came from outside of industry. This is his shot in the world of software, and I compare myself almost to him at some point. But that kid, he knows this is a life-changing opportunity, possibility to get into tech. He's going to work, but I was sitting there like he's getting great development from one of my sales leaders that's best in the business. Please don't recruit him, but he's not leaving me. But no, it's and then too, but I even get on these calls. Like we do end of the week PG calls. We're going around the mud. He's asking questions, but I'm like, not to toot my own horn, but like how many BDRs at companies get to go and have experience with like, hey, why don't you try this? I've learned this, or even like, oh, I get connection over there. I can help you out. That could be one of your MBMs. But I'm like, you can look at that piece from a learning perspective, but there's also, while it's managed chaos, there is some excitement knowing that as a BDR at a big company, you're one of 80, maybe one of 40 with AI nowadays. Yeah, you're going to learn some valuable skills, but the one thing I always tell people, and this is part of the recruiting process and everything else, everything you do each day, every MBM you send, every deal has so much visibility, and it can be company changing. Like if you call in and get that next big deal that closes 2 quarters out, like you can take so much pride in that and know that that changed the directory of a company. And again, you're going to wear multiple hats. So like BDRs, I have some small leads that come in from a career development perspective. Actually, as part of their comp plan, I have them run some very low risk, small deals. I mean, we're sending out demos, questionnaires, and everything that we wouldn't normally be doing this, but like I don't want those deals in the hands of the AEs because I got less capacity. I'm always talking about efficiency. So like to talk to a BDR to be like, you could actually accelerate your sales enablement, your training, further your career that much faster. That could be something that I'd say that opportunity would exist in a startup where at a larger company, like you're going to do your year or two, you're going to stay in that role no matter what. There might be some enablement opportunities, but the speed of learning, like that managed chaos or baptism by fire can be extremely good for someone.
There is a caveat though here because it has to be the right sales leader.
Yeah.
Because otherwise that's not the reality.
No. If you don't know what good looks like, you're going to learn bad habits right away, and that's something that's going to be break your career. I mean, I think of this. I was just actually talking to an AE that I saw had a lot of potential at a company of mine way back in the day. I think he stayed too long, went to another company that wasn't a Playbook company. And we had a genuine conversation. He's like, would you hire me? I'm like, if I knew you, yeah, I think you're a great human, like some of the ICE characteristics, the grit, like I'd go. But I'm looking at your resume, not a chance I would even take a look at you. And I recommended he went to, even though he's working as hard as he's ever done, he went to a company like an FD that's out there, learning from a leader that I had worked for. And he just caveats, he's like, I've never worked harder, but Brian, I've never learned more in my career. And that's some of the things I say is if you want to enhance your skill sets, like maybe you don't get the greatest company right off the bat as long as you're learning, because those skill sets of like it is, I mean, you guys went to the Knicks game last night. Maybe you're playing for the last place team, but you're learning from one of the best coach and you're acquiring the skills and everything else. Doesn't mean you can't go on to the next one, but you've learned how to PG, how to do the 3 Ys, med pick, all these things that are going to be so invaluable to your career. And if you pick the right leader, like you mentioned, the network is ultimately a huge one. If you get someone to vouch for you, like I've turned too many sellers just because I'm not hiring 30 AEs all at once like I used to. The amount of people I've referred to some great companies like Wiz, Rubrik, I mean, others that I know that are great sales leaders, but I want to set someone up for success. And this is how some of the credits and debits go. Like that can be invaluable as well. So, but yes, I think you got to pick the right sales leader. And ideally at this part of your career, I get access to a lot of data, due diligence when I'm going and I'm testing, and it's still impossible to get them all right. So you try to do your best that you know at the end of the day the decisions you're making hopefully will help you do a great W-2 exit. But you got to think of what am I banking personally that's going to help my 30-year career rather than my next year.
Yeah.
You started talking obviously about recruiting and recruiting the right profile for your organization. Has anything changed in regards to anything maybe you're over-indexing in a candidate right now, or is there anything that's changed against what your historic hiring criteria would have been?
Yeah, I mean, there's a big difference between when I'm hiring a majors AE going into a bank. I'm looking for experience a little bit more, though I still you got to have enough intelligence. At this point, though, I'd say I always have the bar that you got to have enough clock speed to spell in this. If you don't, sorry, go find another job. Coachability, I've looked different actually on one of your podcasts. I like what Carlos said, like that index of coachability. I always looked at coachability as a metric of are they just too hard-headed to learn, but then also kind of look like are they too coachable? Or are they just maybe they're better in customer success? And that's not an insult to customer success, but sometimes you can't advocate for a client over the company. You might have to be more consultative with your client. Like maybe you should change your process to be better what are otherwise. But I really look at, the grit. So like sometimes at a startup, a lot of times people that have doing this for 15 years or majors AE are going to go to those bigger companies. So not to say like age is one, but like, or someone that's looking to do a career change, but if they have the right intelligence, but they got to have grit. Like this is managed chaos. If they know that this could be like a career changing, or like there's some A's that have known me that have pulled over from larger organizations, but they know the upside that could happen and they know that they can learn more from that side. So when I'm looking at a profile now, I'm definitely putting character or grit higher on my totem pole because I know of what it takes to, and this is where you're talking about stage fit. Like when you have a Salesforce or even now a Datadog MongoDB as your brand behind your back, it's a heck of a lot easier to get into companies. Like I love FireHydrant, but a lot of times they're like, what, do you sell safety products? Like what is FireHydrant? And you got to get around that, but that takes a good amount of PG grit to do.
Yeah. Obviously we learn from, the things that go well. Is there any big mistakes when you reflect on this recent, last 2 years that you've made that, probably been some really interesting learnings for you?
Yeah, I think at the end of the day, all my due diligence before I got into the company, all my meetings with the SEs and all this came in, and all of a sudden the first 30 days. And I think, too, there's a level of protection when you're going to these companies. Like no one's going to show like the warts behind. They might tell you, hey, we have a challenge in this area. You get in, all of a sudden you're like, okay, yeah, this is
That's a challenge.
You might have understated this a little bit. I also think there was some good surprises where I'm like, I don't think you realize how good this could be of an opportunity, and you under-indexed it, and let's like go accelerate. So you got to accept the good with the bad. But until you really get into the company itself, it's good. There were some things, and I won't go into too much detail, but it's also like you step into it with a first-time founder, and they have surrounded themselves with previous people, decisions you're making, and based on the trajectory of the company, like sometimes you realize that they may have hired in other areas, not go to market, but R&D, other areas where like maybe that wasn't a stage fit item, and just coming from the outside in, and this could be of any role. Like you get a fresh perspective, like they know the ins out of the company, and I remember way back in the day, like if you get all your new ideas when you're coming into a company, like from people, like, hey, this could change. But a lot of times it's not the best ideas because it doesn't know the intricacies of the business you're at and everything else. So like you get all your ideas the first 2 years. 3 to 5, and this is where like you earn your money a lot of times when you've been in it, you're good, you've built up your book of business. Like you get some of the best ideas from a corporate. Like I'm looking at, I know FireHydrant, I know this market inside and out, the competitors, and I'm still fresh enough with my experience from the past. I'm good, but another 3 years here, like yes, I'm going to go to the network, I'm going to keep trying to learn, but now I'm 5 years within FireHydrant. Like all of a sudden, is that innovation as keen as it once was before? So I look at the biggest challenges is sometimes it's tough with political challenges and just past decisions when you have to shine a light on an organization outside. And this is the experience that I have to bring in and work with my founder and my board. And I'm like, hey, some past decisions, some people decisions, I don't think were the correct ones, especially for the stage we are now. And we're going in the hyper growth mode. So these are some things as a holistic part of the company that we got to consider. And just as I'd get fair pushback, I would expect my other colleagues to be like questioning sometimes what happens to go to market. It's not, I don't always have the right answer. And yes, I've had a lot of success and I hopefully bring a lot of experience, but that's what I look for too. Like our new VP of engineering, our new VP of our finance, that whole change has come. And I think that's why like you look at our growth, the decisions we made, the funding and where we're going, like the reacceleration of growth we done is because we brought on a new team that challenged the status quo, used their experience at their companies to go from there. And sometimes as we kind of bring it back to the conversation, a first-time startup, that's part of the valuation. If they've never done it before, they're going to go and learn a lot of mistakes. And like, who are the people that? Now our ELT, I think, is tremendously experienced. We're set up for that growth, but that was some things that was tough to have those conversations internally too.
So tell us a little bit about what the plan is now at FireHydrant. I know you just said that you're obviously 6 to 2 years out, but what does it look like? What does growth look like? Where are you on that journey?
Yeah, it's exciting because it changes so dramatically. I think our decision almost a year and a half ago to launch a second product when we did, and this was markets going down. How do we increase our TAM? Where do we see vulnerabilities in the market? Going after a PagerDuty and Opsgenie was a great decision. It kind of built out the first part of our platform. I'm like, we got that one right. I think now that we've acquired a competitor that had a ton of historical data, like we're 5-6-year-old companies and we're the oldest in the market from an incident management perspective. How do we take that learnings, that experience, this wealth of data, even though we got to be careful of what we're training on what, how do we increase that AI story of we've done a lot of investment there. I think that starts to do the narrative of, without getting into the observability space, and I don't even want to touch that space right now, is we incorporate between more AI code, CI/CD platforms, faster delivery, everything else. We sit at a good influx of developers are building, but they got to build. I mean, this goes into the old App Dynamics story. Things are getting more complex, more speed, always on expectations are there. But between us being a pioneer in incident management, like you break it, you better go fix it. Making that easier with data AI, like, hey, it's a similar incident or you're about to push that change. Maybe you shouldn't because the last 2 times you've done that, you've broken the system. Like that is the story that we're building. Like we want to be the leads in reliability. You can have all your data dogs in the world and all this, observing everything. They're going to set off the alarm. Maybe something's different, but you'd still be surprised at some of these advanced corporations that have spent tens of millions of dollars on observability. So many people are just like, that's broken, a client's reporting and everything else. And we're just the ones that now set off the alarm, which I think is commoditized part. But how do you fix it that much quicker? how do you learn from that incident that much quicker to harden your system to make it more reliable? And so the trends in the industry with, and this would be same as Harness or others in the market, like you got more engineers, you're pushing out code, you're doing change that much faster. What does that introduce? A lot more variables to break stuff. That's where we kind of come in, and that's where I see our market becoming interesting, especially when we can look at what's the possibilities of AI, and not just to say it as a buzzword. Could that change the trajectory of the company? For something 2 years ago, we might not even be imagining. That's why I kind of keep putting that caveat of, I don't want to predict what's out there 3 years, because I don't know if anyone knows what's going to be out there 3 years, and I want to be nimble enough to adapt and keep taking advantage of things we're seeing in the market.
Well, and anything about the growth plans? You got any international expansion?
That's the one, yes. If I had my way, I'd be in Europe yesterday, but
Right.
no, it's I don't want to give away corporate strategy, but it's
Right.
yes, the amount of global clients that we have for better support markets. Love to push into Europe on that side, especially as we're seeing the demand. And as much as I puff my chest out on like PG outbound, the good thing is the amount of inbound. I will never probably say PLG, but I'm like, that meeting is up in demand. So all these things, and what we're talking about is, where do we put those teams? Where do we make further investment? And two, there could be exciting, like why we did our raise in this, like there's investment opportunities that behind the scenes, there's always conversations going on where
Don't have to give away too much.
Don't want to play
so no, I'll
Should we
just
poke
say
him a little bit more?
we're at a very exciting time, and I think we have some fun options coming down in the next quarters that can make that probably more public a trajectory that I can share on that.
Sure.
Hopefully, maybe the next podcast.
Maybe. Sounds great. Well, I think this is the point where we reflect on what's been a truly insightful session, Brian. I'll start off by saying kind of a big thank you, but just to kind of reflect on what we've spoken about today, I think one of the big takeaways here is the importance of the tribe around you. And so many people that we speak to are thinking about entering startup world, right? And, you know, that relationship with the founder is so critical, but it's also the people around you that you can lean on, because without that, it is inevitable that you're going to make mistakes. And the only way to learn is from the mistakes that other people have made. Yep. And so surrounding yourself with so much of your network, but also having a founder that sees you not as a tool, not just as a revenue engine, but someone to really partner with to build the business. I think having that relationship, it wouldn't be possible for you to have the impact unless there was that level of trust. Yep. And so you need the founder, you need the right board, you need the right product market fit, and you also need the right leader. And I think those are the three components that really give a startup the best chance to be successful. You know, I think it's been really useful. I think lots and lots of learning. Thank you so much for the honesty and the transparency and, you know, all your insight. And we're genuinely really excited to see how things go for you, Brian. So best of luck and looking forward to the announcement soon.
No, well, thank you for having me on. It's been a pleasure, and look forward to maybe a drink or two in New York when
there we go.
Absolutely. And I think, you know, just to add to Simon's point, I think, you know, with the number of startups and the number of, you know, shiny opportunities out there and people trying to, you know, is it the right time? Is it the right opportunity? I think, you know, using your experience and what you've gone through, people are going to really, really, really lean in and find this really useful. So yeah, thanks ever so much for sharing your story and sharing your experience in this recent, you know, shift. So to all our listeners, thank you so much for listening. If you like what you heard, please do subscribe to our various channels on iTunes, Spotify and YouTube. All the links will be in the description below, and we look forward to welcoming you back for another session very soon. Take care and goodbye.